All right, everyone, welcome back to Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiots. Very excited for this controversial, some would say toxic interview that we're going to have today with Samson Mao. I've known for quite a while as the Chief of Strategy at Blockstream. There is so much to unpack as we think about 2020. What is going to be going on at Blockstream, some new developments to think about from them as a company, but maybe much more importantly, what to expect for Bitcoin more broadly. Samson has a rich history as a sometimes internet, I don't want to say troll, I'll say troll, you can live with it. But certainly one of the most influential marketers and memesters during some of the great battles in 2017 and even earlier regarding Bitcoin scaling. I happened to be on Samson's side, although I was not an employee of Blockstream because...
Are you sure?
Oh, I am well documented as being part of the UASF crowd. We're going to get into that in a minute. But we'll go through the whole history, and I'll give folks a little bit of flavor for how I've thought about this problem, and generally how the dust has settled and what the results have been. But before I give my take, first off, I want to welcome Samson. Thanks for joining, and let's start all the way back, right? So, how did you first get into this industry and walk through a little bit of the early path to get where you are today? Because you've been now at a couple of the most important companies. You've kind of seen the East-West divide, up close and personal. Obviously, very close to the pulse during the arguably Bitcoin's greatest battle that it's had in the divergence of the community around the block scaling debate. But let's start with the basics, right? So who is Samson Mao?
I'm just a guy working at Blockstream. So those are a lot of questions. I'll try to remember. Let's see. So I first got into Bitcoin, I would say officially towards the end of 2014. And I joined BTC China first as an advisor. And then I switched over to being COO. And BTC China, if you don't know, was one of the largest exchanges and mining pools, I think, in the past. It rose to prominence after Mt. Gox was hacked. So everyone just jumped over to BTC China and started trading there. And it was one of the three big Chinese exchanges back in the day, OK, Coin, Huobi, and BTCC. So after I joined, I did a lot of rebranding, positioned it more for an international marketplace, launched the mining pool and grew the mining pool. I think largest we are 18 or something % of the network hash rate. And yeah, so I've been around during that time. I left BTCC to join Blockstream. I think that was in 2017, around the time the PBOC shut down all the Chinese exchanges for serving customers in China. And I guess throughout that time, I was also involved in a lot of those things that you mentioned, like the scaling debate or Bitcoin civil war, some call it too. And I did make some memes back in the day, but don't do that as much these days because it's time consuming and I have a few things I'm into and working on.
Well, the dust has also settled for sure. So maybe of less importance to roll up your sleeves and do battle on a daily basis like we saw in 2017 from all sides, not just you. Yeah. What is Blockstream, right? So I think even folks in the industry who know a little bit about Blockstream or what the company has done, some can view it as a black box or at worst with suspicion. And part of it probably dates back to some of these battles and some of the stylistic elements of how Blockstream and some of the developers on that team, approach this conversation. But walk through the history of Blockstream itself, and then how you kind of came into the leadership ranks a couple of years back, and really where the company's positioned today.
Right. So Blockstream, I like to introduce it as a Bitcoin infrastructure company. And sometimes I'll say Bitcoin and blockchain infrastructure, depending on who I'm talking to. But largely, we work on a lot of things to do with Bitcoin at the protocol level, technologies on top of it, wallets in the ecosystem. And we recently got into mining as well that we announced this year. That was our big reveal. But I would say overall, Blockstream does a lot of things to augment Bitcoin in a lot of ways. So the Liquid network is also another one of those things that we think helps the ecosystem. But Blockstream is also, I think, misunderstood, and we're often the subject of a lot of conspiracy theories. As you mentioned, I think it largely has to do with who the company was when it was founded. So it was founded in 2014 by Dr. Adam Back and a lot of other Bitcoin core developers. And a lot of people took that to be like, the Bitcoin core developers are creating a company and this is going to co-opt Bitcoin. And a lot of conspiracy theories rose out of that. We have a whole subreddit dedicated to us, Roger's subreddit. And, I still think we get a lot of conspiracy theories and things attributed to Blockstream, which are broadly laughable and mildly entertaining at best. Mm-hmm. And I think even there's something that came out today where Craig Wright was telling the court that Blockstream hacked him, and he wants discovery on communications between IRA and Blockstream and Bitcoin developers.
So there's a lot to unpack there. So most people know Craig Wright as Satoshi Nakamoto, of course, or you may dispute that claim. But there is an ongoing case in Florida where and another early contributor, early Bitcoiner, Ira Kleinman, who passed away, was allegedly a business partner of Craig Wright's, and they dispute some million Bitcoin are currently held in this trust that Craig has access to that he can't prove, and he's submitted fraudulent documents, and it's been kind of a chaotic mess. So
but
the natural
Ira was not actually a Bitcoin developer. I think he might have been into Bitcoin, but he never contributed anything in any significant way.
Oh, sure, yeah. Early community member, right? So what is interesting about Craig, jokes aside, is that he was so early. I think that point is not necessarily objected. There's not many objections to whether he was in early. The primary objections are he's not Satoshi.
Well, when the big claim is that he's Satoshi, he's got more money than your entire country, I think people don't really care about when he got into it at that point.
Exactly. So back to Blockstream, though, some of the conspiracy theories, as you put it, are really centered around how much of the core developer community was employed, especially early on at the founding of Blockstream. So for people that might be newer to the industry, a bit of history here. Blockstream was formed in 2014, but raised money and really started to aggregate this collection of pretty high profile Bitcoin core developers and contributors in 2015. So Matt Carollo, obviously Adam, who you mentioned, Greg Maxwell, a number of others were all on this core team. And at the time, it was basically Blockstream, some individual contributors, and a couple of people at MIT. Until there was another company called Chain Code Labs in New York that absorbed some of those developers. So on the one hand,
Square Crypto.
Yeah, now Square. So it is kind of gradually, decentralizing, I guess. But at the time, Blockstream certainly did command a high percentage of influencer core developers. And the flip side of that was it was at a time where no one was really writing checks to actually build out the core protocol. So this company was funded by Silicon Valley insiders that viewed this as an investment in their investment, I'd say, for the most part, and then quite a bit of optionality because the thesis was maybe this could be a Red Hat type of business, I suppose, with a lot of optionality in terms of tools and applications that were built on top or around Bitcoin. That thesis it made a lot of sense. and it certainly, got a good deal of pickup. And the issue was things pretty quickly started to go south from at least a brand or perception standpoint, as this, scaling battle really started to pick up en masse. So it's really hard to do. I know at least one of our friends on the editorial side is probably, I hope, going to write a book about this, because it'll be fantastic if he does. But in just a couple of minutes, can you just recount from your perspective, like this saga and how it started? Because you really had one of the most unique views into this over a multi-year period, having been at BTCC and then over at Blockstream. So knowing the Chinese market and the mining market very well, and obviously the core development market at Blockstream.
Mm-hmm. So let's see. Yeah, I think your summary is pretty spot on. There were definitely a lot of core developers. People saw the company in a certain way, but at the same time, when Blockstream was founded, there was no funding to build anything. So people had to support themselves with other jobs, or just to work on this in their spare time, or just try to fit it into life somehow. And I think with the founding of Blockstream, to develop sidechain technology that is powering Liquid and to work on Bitcoin is kind of a type of synergy. So those people that invested early on in the seed round were in a way funding development of this tech that benefits themselves and the larger ecosystem, as well as building on things that we can commercialize down the road, like Red Hat, where you can service open source technology. And I think it kind of did kick off the trend to have companies building up around the space to have developers like Chaincode, as you mentioned, and then now with Square Crypto, which is also doing the same thing. So it kind of, I think we were the first to show this model, and it's propagated a lot more, and it is a lot better for the ecosystem too. I don't think it was the plan to like get all the developers into one room and hijack Bitcoin and commercialize the tech, but it was just they all worked together on open source stuff before. They could create a company and fund their work on both commercial aspects and non-commercial aspects, like the open source part. And I think a lot of the FUD and misunderstanding is like how open source development works. And people familiar with Linux and Red Hat, obviously they understand. But for a large chunk of, I guess, the fintech ecosystem, or even the financial system, financial industry, it's probably new to them, and they don't really know how it works. So even if you have a lot of developers in one company, it doesn't mean that they've co-opted the project, because there's still other people outside in the community contributing. It's a transparent process, it's a meritocracy, and everything is open, and all the work done is also open source too. So fundamentally, I think that was what kicked off a lot of that civil war and scaling debate. One side, you have people not understanding how to scale this new technology, and the other side is just, you're just fearful of this group because it looks like it's powerful and dominating, but it doesn't really apply to open source, I think.
So let's talk about that other side of the market, because you also knew the mining community in China very well. And the original split in terms of factions was over something that seems very trivial, the block size. So basically the amount of transactions that could be processed, or the amount of data that could be processed in a single block, was at one point early in Bitcoin's lifetime artificially constrained by Satoshi because there were spam attacks, right? So he soft forked in a cap on the number of transactions and the data package that could be delivered per block. And voila, we had 1 megabyte blocks. So as those blocks started to fill, the industry was at a crossroads. Do you keep the fees low? Do you ensure that it is easy to process payments and high number of transactions and increase the size of and the amount of data per block, increasing the size and bandwidth and storage requirements that it takes to actually store the blockchain itself? Or do you come up with other workarounds? And this kind of, there was a few iterations here, right? I remember the 248, proposal, and it was like SegWits, and then it was
flex caps,
SegWit 2x, flex caps. So, but at the core, at least at first, it seemed to be that the mining community, predominantly from China, was a strong proponent of increasing the block sizes. whereas the core development groups were taking a more cautious approach. Explain that dynamic and on the part of the miners, kind of really where their mentality was at the time, and maybe how things culturally broke down, because it does seem that some of this was mistrust that just got out of control after a few kind of early disagreements or misunderstandings.
Mm-hmm. So I think the whole thing largely kicked off from the developer side. So it was Gavin Andreessen and Mike Hearn that first started pushing Bitcoin XT when they couldn't reach a consensus with the bulk of the Bitcoin core developers. And I still remember like running BTCC pool. I forgot who it was, either Hearn or Andreessen. I think it was Hearn. He reached out and said, it's time to upgrade to XT. And that was basically the moment I got sucked into the drama. And we had to deal with it. And back then, the communication channels were not very good. As you mentioned, there's a very big divide. The developers, Bitcoin core developers, were pretty much isolated in their own world, and there's not much outreach. And then you had like Hearn and Andreessen pushing this thing. So from the China perspective, it was like, okay, the developers are saying this thing without fully understanding who they are in regards to the other developers in the project and the dynamic of how open source software works. So that was what kicked it off, I think. And from there, it just kind of snowballed. And I guess it did become this kind of miner versus developer thing. But I think Jihan Wu had a lot to do with that. The co-CEO of Bitmain, now back to CEO of Bitmain, I don't know. But he drove a lot of that divide and rallying in China to, I guess, fire the developers. But there's also, people on the West side that, the Western side that drove it too, like Brian Armstrong pushing for firing the core developers. I think that phrase was tossed out quite a few times. But yeah, it was a very complex thing, and it had to do with poor communications and information asymmetry too. I think what Messari does to add transparency is good because it helps you see what's happening. But back then, obviously, there was not that much information, communications, or anything. So you have people in China saying, we're going to do this. And a lot of people, first of all, don't understand how mining works. So a pool operator can say whatever they want, but they can't piss off their customers, right? They can't speak on behalf of their customers, which are the actual miners. And then you also have a lot of opacity around who is in charge of what, and do they actually represent a significant amount of people, or should they be saying the kind of things that they're saying? And I think at that era, that was all, it was a free-for-all. Everyone could just stand up and say, I decide this. And then people in the West would get freaked out and go, oh, the miners are going to do something. And it just caused a lot of drama.
There's still, I think, a lot of scar tissue from some of the businesses that were impacted from some of the personalities that lost, right? And it's kind of impossible to know how things would have worked out if the block size had been increased. But technically speaking, why was there such a hard line in the sand over this seemingly trivial issue? Okay, we're a victim of our own success. The blocks are filling up because more people care about Bitcoin, because the market cap has gone from nothing to tens of billions of dollars at that time. It seems like a relatively trivial change to go from 1 to 2 megabytes per block, especially if you compare it to some of the other blockchains that are being run right now that are completely centralized. Especially with like Moore's law, right? You'd expect, okay, you should be able to increase the size without it really causing too much of a headache as storage gets cheaper and bandwidth gets faster. So what really drove this? Because it's still a point of contention whether this was something that set the industry back, and we'll just kind of never know what could have been, or if it's kind of in the past, and let's focus on layer 2.
Right. So I think it's largely two things. The first thing is the misconception that Bitcoin is a payments network, that transactions have to be fast and cheap, or else the network will stop growing. And I think it is driven a lot by early adopters for Bitcoin that were using it for payments, and they're waiting for confirmations. And I guess that was how they first encountered Bitcoin. Like when this technology was in its infancy, yes, no one was using it, so it was really fast and cheap. But if people are using it, then obviously the fees will go up because there is a limit on the block size. But I think they're conflating a settlement network with a payments network. And if you look at the design of Bitcoin, it's really a settlement network because the blocks are 10 minutes. They are variable in time. You can get a block every hour if you're not lucky. But there's no guarantee it's 10 minutes. And even 10 minutes, you wouldn't go and buy a coffee and wait for 10 minutes for the merchant, right, to confirm. So I think that's one part of it. And that helped I guess, fuel the fire because people don't really understand what Bitcoin is. It's uncensorable digital gold. It's not, coffee money or whatever. The other part is it sounds easy to change. Like we want to scale up the transactions. We want to have more throughput. Let's just make the blocks bigger. But by design, Bitcoin is very hard to change unless you're willing to fork off part of the network and alienate them. And I think that misunderstanding also threw a lot of fuel on the fire too, because the argument sounds so simple. Like the developers didn't do this. They're bad. But the thing is, developers can't do that because they don't control the network. And this goes back to my point about open source software. They can recommend something, but they're not going to recommend something they don't believe in or they think is unethical or malicious. So they can't. But then that inaction to some people, and the miners particularly, certain people in China, thought that they are trying to stifle the network or kill the network. And that goes back into, it feeds back into the Blockstream conspiracy, which is these guys are trying to make side chains. And that is why they're stifling the block size and keeping it low so that people buy their technology. So it's a lot of different things.
Let's talk about the literal black box as like a little sidebar here, because this is a narrative that I'd heard behind closed doors, right? Like, no, you don't understand. Blockstream is selling a box, and this magical box is how they're going to make all their money. So if the block size increases, this is going to jeopardize this business line for them. And that box is basically the hardware that supports Liquid, correct?
Yeah.
So let's talk very quickly about Liquid. It's I think not a run-of-the-mill product. It's I think interesting and has, it seems, some decent usage early on. But let's talk about Liquid so that people can understand why there might be this conspiracy theory around this particular element.
Right. So Liquid is a sidechain. So Blockstream was founded based on the sidechains white paper, talking about how you can have a blockchain anchored to another blockchain. So a sidechain is really a blockchain without its own native currency. And the native currency of Liquid is, of course, Bitcoin. So you have to lock up Bitcoin on the main chain to unlock it in Liquid. And that's why there's a one-to-one relationship. And I guess the conspiracy talk is that Blockstream wants the main chain to fail so everyone migrates to Liquid, but that's definitely not the case because you still need that trustless settlement on the main chain. Liquid is an inter-exchange settlement layer meant to link together crypto exchanges. So if you're moving from, say, Bitfinex to Bitsy, those are two of Liquid members and they've integrated, you don't actually need to go back down to the trustless layer, the base layer, the main chain, because you're moving from one custodian to another custodian. So you can use a federated chain which is powered by that box. The box itself is we call it a functionary box, and it's just a box that signs the blocks and extends the Bitcoin, the Liquid sidechain. So, it's nothing magical, and I don't think it really detracts from Bitcoin. It's a way for people to trade better, and that's also why Liquid has things like issued assets. So you can have things like stablecoins issued in Liquid. You can have utility tokens, security tokens, whatever you want. And it's all for improved trading, faster trading, more reliable movement of things on chain, and also to do things like atomic swaps, where you can do a trade between Liquid Bitcoin and Liquid Tether trustlessly, like between the two parties. So you don't have to trust a third party or a counterparty to hold your funds. But I mean, this is a technology that helps Bitcoin in the long run because it can alleviate some stress on the main chain when a lot of people are trading, like in the bull run, say the last bull run, the fees spiked because everyone was trying to move money back and forth. A lot of trading firms were overpaying fees because they want to be included in the next block because there's money to be made. So if you're
Mm-hmm.
making a trade for 100K to gain 100, win 100K or profit 100K, you're fine to pay $100 in fees, right? And that will game the fee estimation algorithm so that average people trying to buy something would be paying higher fees because they're pulling everything up with their
Mm-hmm.
average cost. So Liquid helps with that in a way, but I don't think scaling off chain means that you need to damage the main chain. It's the same deal with Lightning. So we started investing in Lightning also in 2015, investing in research and development. We built up our team and we put a lot of resources into that. And now Lightning is out there. You could say the same thing, that Lightning takes away on-chain transactions. But if Bitcoin is going to reach billions of people, then there needs to be off-chain scaling. Otherwise, there's just no way to accommodate that many people and that much throughput.
Mm-hmm. It makes sense from a narrative standpoint, but I think that was one element that helped people doubt the intentions maybe of some of the folks at Blockstream. But what was interesting is it quickly became more than just Blockstream, right? It was some of these other groups of developers at MIT, at Chaincode Labs that were not affiliated with Blockstream that were starting to echo some of the same concerns. This would be now in early 2017, especially. And around that time, we had the emergence of SegWit 2x and the infamous New York agreement, which was basically ostensibly going to be a grand solution that everybody was ultimately happy with, some compromise where all the major businesses got together, the exchanges, the wallets, all of the major miners flew in from China and met at consensus. And I believe Blockstream and some of the core developers were invited, but as this agreement was quote unquote passed, it didn't necessarily have much, if any, developer buy-in. It was just something that the vested moneyed interests that were building infrastructure around Bitcoin had essentially agreed must happen, right? Or else, kind of, right? And that was, we're going to incorporate this new technology, SegWit, which the core developers were favorable on and believed could be implemented and achieve some of the same scalability benefits. But they would do that at the same time that there was a doubling of the block size. Mm-hmm. So everybody gets a little bit, and then we can just kind of move beyond this. The core developers, Blockstream included, basically said, "Fuck that," which on the surface, right, seems like heels were dug in, and there was a bit of obstinance. So what? Why was that so controversial, right? You talked a little bit about the technical, being safe and secure and thoughtful about upgrades, but why exactly was that ultimately a non-starter?
Right. So first of all, I don't remember anyone from MIT, DCI, or Chaincode saying anything contrary to I think what a lot of the Blockstream people thought at the time. But anyways, we can skip that.
No, I agree with you. I think it wasn't just Blockstream, right?
Right. Okay.
Neither Blockstream nor any of those other core developers.
Yes. Okay. So edit that out.
Yeah.
So I think the crux of the issue is you can't compromise, and a lot of that is projected on the developers because they say, why can't you just compromise? But it's not something they can compromise on because it is a decentralized network. And there are more stakeholders here than just businesses, mining pools, exchanges, etc., and including developers. There are the users of the network. And that was why the UASF happened, and that was why No 2X happened, because you can't just say unilaterally, we decided something, and it's going to happen. Like, yes, you can decide that for yourself, but you're going to fork off the network. And it's even not that simple because the miners have to get paid. Actually, let me correct that. The mining pools have their customers, which are the miners, and the miners need to get paid. But it's the mining pools that are signing agreements and saying, we support this thing, which they can't do. But even the actual miners didn't like that because that's their bread and butter. They've invested money in this hardware infrastructure. And if you fork off, then they're not going to get paid.
Mm-hmm.
So it was I think, I forgot who set it up, but someone set up a poll for the Bitcoin developers and asked them, what do you think of 2x? And they all commented on this thing and said, no, 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 no. And I think Matt Corallo said, LOL, or something like that. But yeah, the sentiment was largely like, F you guys, this is ridiculous. And that's echoed by the users. And ultimately, it's the users that matter, because if you're a user or a hodler of Bitcoin, then you get to decide what happens. If other people want to fork off, they can always fork off and make their own chain, which is, as you know, what we saw happened. And those two other chains aren't doing that well. Actually, not two. There's 10, 20 other Bitcoin forks, and none of them are doing very well. So Bitcoin is still Bitcoin, and what they wanted could never have come to pass because it wasn't for them to decide, and it wasn't for the Bitcoin developers to decide.
There's a little bit of like a winner's narrative here that you're projecting, and winners do write the history, right? When you say, oh, well, they can just fork off. In reality, it did look like it was going to go the other direction, right? Where for a while, at least, it looked like the major exchanges and wallets would support this larger fork and ultimately take their customer assets with them. And ultimately, they kind of laid down arms in November of 2017. And that was actually the beginning of the real mega spike in the market. Technically speaking, Bitcoin Cash, which was the fork, it happened in August, and Bitmain and Jihan and Roger Ver were kind of at the fore of that that early hard fork, which was really designed to be a just in case type of maneuver, right? Just in case SegWit 2x is canceled and folks renege on the New York agreement that we reached, compromise and hard fork into this larger kind of new system, we will split the network and we're just going to unilaterally increase the block size. So Bitcoin Cash was technically earlier than when this was called off, confusingly, but it really picked up steam after the agreement was called off, because then many of those disenfranchised thought, well, you know what, fine, we've had a fork, confidence is lost, we're going to go our own direction. And yes, that ended up being the losing side, or at least it certainly appears that way now, that it's trading around 5% of what Bitcoin is. But I want to talk about I from a third party, right, outside looking in, I would argue that one of the most influential people in that saga was you, not necessarily from a negotiating standpoint, but from the memes, right? Like the hats, like the Trump hats, make Bitcoin great again, and UASF and no 2x, right? There was a viral component and kind of guerrilla marketing component that seemed very effective as you kind of build up the narrative around taking on what seemed at the time to be 90% of the meaningful executives in the industry, if you're looking for leadership, right?
Yeah.
What do you think? What do you think was the most important thing that you got right as part of that strategy, or was this something that was kind of an organic effort? How much of it was just you? How much of it was Blockstream? And ultimately, what do you think that says about kind of the current state of the quote unquote community right now when it comes to crypto Twitter and Reddit and just this very snarky, at times vitriolic community of common commenters? Because I think there was a method to the madness and it worked. But now, is that just always going to be in like the Bitcoin DNA?
A lot of questions. So I guess going back to your first comment, I kind of expected it would have failed. A lot of people were nervous at the time, like, because it did look very threatening. You have all these companies saying something. And I actually I predicted failure of a lot of the previous attacks. So Classic, XT, BU. I pretty much said that this is dead, and then it died shortly after. But the 2x one did look probably more threatening. But I think the Bitcoin ecosystem built up a lot of immunity from dealing with the previous forks.
Mm-hmm.
And if they did actually go through with 2x, it could have done a lot of damage. But I think ultimately, like, they could have split and took their users and said, this is Bitcoin now. But I don't think they would have won, like, without a fight. It might have fractured everything more, but it's hard to say because, you know, Jihan did push out his Jihan activated fork later on, which created Bitcoin Cash. So you could say that if they won, that would have happened too. And I think that corporate controlled coin would have decreased in value over time. It may have been worse. It might have been more protracted if they had went ahead with it instead of giving up. But I think in the long run, the real Bitcoin, the original chain, would have won out in the end, because I think money ultimately wants to be free, and that's why people like Bitcoin, because it is apolitical, free-moving, free-flowing money that nobody controls. So the more free Bitcoin would have been the one that went out in the end anyways, even if that one was a smaller one at that split, if that split had happened.
Mm-hmm.
And I think the hats were, I didn't really expect that they would do that. I was making them for fun just because I thought it's interesting. You could wear a hat with a fun slogan on it or something like that. But the UASF hat probably took off because people wanted a way to signal, because there was a lot of signaling going on. There's signaling from the exchanges, from people signing letters, from mining pools declaring stuff or flagging things in their you know, advertisements on the Coinbase, right? Like saying, I support this. And I think average users on Twitter and other places wanted something they could use to signal. And the hat was just a convenient thing because you can take a picture with the hat and that's your profile picture and you can say a message, right? Or if you're doing a podcast talking about something, you can wear the hat and it's visible. So I think it's a practical instrument, and it probably served the purpose as the kind of a rallying cry. Also making the hashtag take off a bit because it's UASF and it sounded cool, right? It's like USAF. But I think that kind of meme culture is part of Bitcoin, and it is part of the people that make up Bitcoin and use Bitcoin.
Going forward a little bit, you know, the original XRP army was the, you know, Bitcoin maximalists, right? And we'll talk about that narrative in general, right? Which was another meme and very savvy, you know, marketing move, you could argue, by Vitalik, as you know, he kind of reframed the attacks that he was getting from the Bitcoin crowd. You know, is there is that coming down to earth a little bit? Do you think, or are we just getting started from an aggressiveness standpoint? Because, you know, the Bitcoin community that has remained has been viciously anti any other asset, which I understood the hyperbole and the viciousness around the kind of fight for the soul of Bitcoin itself, right? But it has always struck me as insanely short-sighted or narrow for folks that believe so strongly in Bitcoin to just immediately write off any other assets and their potential and the protocol's potential. And in fact, you know, even a couple of weeks ago, that, you know, with Adam, I had an exchange on Twitter where, you know, so sometimes I'm just scratching my head, like, why are you picking some of these fights still? It's right. Like, haven't we moved up the value chain and like found bigger bosses to focus on now with Bitcoin at 130 billion in market cap versus, in some respects, you know, punching down at times when at the end of the day, most of this other technology, not the other assets, but at least the other technology could be repurposed and ultimately very valuable, generally speaking, whether that anchors back to Bitcoin or some other blockchain.
Well, are you kind of hinting at your Ethereum support and being attacked for that by Bitcoin maximalists?
Well, I mean, I don't look. I don't care. The irony is, 90% of my portfolio is in Bitcoin and Zcash, which is a fork of Bitcoin. So like, I never really understood why, I was considered an ETH fanatic. But it is where a lot of the interesting experiments are happening, right? So I don't think that should just be like automatically shut down and kind of kicked to the side and written off as a scam. There are a lot of scams in crypto that I think the industry needs to do a better job of self-policing, but not necessarily not good faith efforts. Where do you come down on all this? Because you're pretty outspoken yourself still.
So I guess it largely has to do with what you define as good faith effort, right?
Mm-hmm.
And I think a lot of the hate directed at Ethereum is justified because of the pre-mine, the way it's been marketed and sold to people. Like, this is the future. A lot of their marketing was like, in the early days, was this is the better Bitcoin. It's scalable. It's the next generation. And I think that is why a lot of people have a beef with Ethereum, because it is scammy in that they pre-mined 72 million Ether, sold a little bit to the public, and made a lot of promises that they never deliver on. And they do a lot of pretty bad software engineering too, like a lot of hacks, the DAO hack, the parity hack, and the list just goes on and on. The most recent thing was they forgot their hard fork to postpone the ice age. So 2 weeks later, exchanges have to do another hard fork. The fact that a lot of their nodes are centralized onto Infura or just Amazon, DigitalOcean or Allium or all these services, like, it's really the representation of the project, I think, that irks a lot of people in Bitcoin, because it's the antithesis of Bitcoin in every single way, which is Bitcoin is pretty humble. It doesn't promise to do anything, and it serves its function well, and it functions well. It's decentralized. But Ethereum is kind of the opposite. And I think that's largely why there's a lot of hate. But personally, like, I get called a Bitcoin maximalist, but I don't think I fit the max. Like, it depends what you call a maximalist. Like, is the maximalist the guy that likes Bitcoin and hates everything else, or thinks Bitcoin is the best and probably wouldn't touch anything else, right?
Mm-hmm. Mm-hmm.
I think Bitcoin is number one, and I wouldn't touch anything else myself, but I also don't hate on other projects that are not scammy in nature. Mm-hmm. So I think I was on Peter McCormack's show a long time ago, and we talked about Bitcoin Cash and Bcash and stuff like that. And I said, I have no problem with it, but it's just how it's marketed, that this is the real Bitcoin, that really bothers me. And that's why I go on the offensive and I attack it, because that's just a lie. And that's just misleading people. And then they're using like bitcoin.com to convince people to buy Bcash by putting it first when you hit buy Bitcoin. It's just a horrible thing that tricks a lot of people, and it damages, I think, the rest of the industry.
If things had gone the other way, and in a parallel universe, SegWit 2x gets approved and the New York Agreement is basically ratified, and there's a hard fork upgrade in 2017 to bigger blocks with SegWit, and all of a sudden the new minority fork is the 1 mega block core developer, preferred chain. Would you be saying the same thing? Would the larger Bitcoin that had won out be the new?
I think the larger one is the new one. It's the same thing with Ethereum. So Ethereum Classic is the original. The ETH ticker is the new one. And it goes back to the rules, the consensus rules. If you change the rules, the new one is different. It's a different chain, technically. And that would be the same. If the NYA guys had won, theirs would be, a new Bitcoin. But everyone on the Bitcoin maximalist side saying this one is the original one, they're actually correct. And it would be the same for anyone saying ETC is the original. I would agree with them. That is the original one, and they are correct too.
Yep. And some of this just goes into like IP and naming and brands and, and whatnot, which is maybe a different legal, more boring conversation, but interesting nonetheless. We've obviously covered a lot of ground so far. I think, and we haven't even started talking about, actual Bitcoin, upgrades in 2020. It's like, I'm still, I don't know how to say it yet. Because it's so foreign to me that we got to start saying 2020 and then the number. Yeah, exactly. Yeah. Instead of just 2000, whatever. But I do want to maybe just, have I'm going to get completely slammed if I just let you go willy-nilly with all those comments and don't raise any objections. So the first one being, the pre-mine itself with Ethereum. Do you not think that was necessary? Because you're talking about an environment in 2014 when this happened, when Bitcoin was already well established. You're not going to be able to recreate the miracle of Bitcoin, right? Like, think about what's happening with Grin right now. Think about the performance of Zcash. No one will ever do a launch like Zcash or Grin again, because you just know that it's going to be impossible to build a community when there's just years, decades of inflation that you're behind the eight ball on, right? So you have to think about other novel distribution schemes, and the original crowd sale for Ethereum was relatively novel. You could argue, Mastercoin had done that previously, but it was not like they were an also ran that was coming up with this scheme to defraud a bunch of investors through this new crowd sale because they wrote a white paper about it. There was quite a bit more of an organic community that had developed in the previous 8-9 months. And to me, it just that feels different. Now, you can quabble over whether that centralized too much of the early power and whether the proportions were wrong, but I'm not sure that I necessarily agree with that. From a security standpoint, I don't want to debate that, because we could go all day long, point by point. But maybe the better one to talk about is your points on security, which I think are accurate. And really, it comes down to the attack vectors for Bitcoin versus Ethereum versus all of these other blockchains. And Bitcoin by design has been developed as this. Bitcoin is NASA and Ethereum is fill in the blanks. Playing a little bit faster and looser, and move fast and break things. So it's Facebook or a Silicon Valley tech startup. Do you is that an important culture to maintain above all else? Right. It seems as though, from a core developer standpoint, that's one of the foundational principles of Bitcoin. It's like, don't fucking break anything. Mm-hmm. Right. And because of that divide, I just wonder if that makes it okay, right? If that, Ethereum is, what you see is what you get. We're moving fast. We're trying a lot of experiments, and we're trying to kind of build this thing in midair versus the slow, methodical approach to Bitcoin, which, some would argue is single purpose for asset settlement. Is that enough of a disclaimer, or do you still just not buy it? Because at a certain point, it doesn't matter what the original creators marketed as. Mm-hmm. What matters is what people view it as today. And this already happened with Bitcoin. So why is Ethereum any different?
Well, there's a lot of ways to kick off a project. Like, you don't need to raise that much money to start a project. Like, you have Monero, which is an organic project. It's maintained. They have a development team. They didn't pre-mine, and they have no reward sharing from block rewards like Zcash does, right? So Zcash also kind of kicked itself off by splitting off a part of the block reward to pay themselves. Mm-hmm. But it's not like every project needs to pre-mine or do that. Like, if it's a viable project, I think you can find funding, or people will work on it organically. And I think the question is really, when it's not organic and it's promising something that they cannot deliver on, that is probably what makes it scammy, or makes people call it a scam, because that doesn't look very honest. And I think if these projects took a different route, people would not be so hard on them. But I mean, there's just a long track record of Ethereum promising things and shifting goalposts whenever, right? Like, they're supposed to transition to proof of stake, and they haven't done that. They keep deferring it. And this is kind of the stuff that irks Bitcoin people, because it's just laughable to watch. And the question really is,
that's the nature of software development in general, though. Come on, I mean, how long does it take? The sidechains white paper came out in 2014, right? So I guess point being, it goes both ways in terms of hitting milestones, and some of that is just because it's more difficult to work at a predictable pace when it is a decentralized stack.
Right, but Bitcoin never promises anything. So next year in 2020, we will likely see Taproot and Schnorr, but there's no date, there's no promise, there's no hype around it saying, get ready guys, buy your Bitcoin now because Schnorr is coming. That's like what Ethereum will do, but Bitcoin doesn't do that. It just happens when it happens organically. And I think that's a big differentiator between the two projects.
Why? I mean, we're going to agree to disagree on that. You know, I understand where you're coming from. I also understand kind of the other, you know, the rebuttals to this. The bigger question for me, just from a practical standpoint, is why pick that fight, right? Or why continue to drum that narrative? Because, you know, we're at the point now where Bitcoin is quite literally an order of magnitude larger. I don't know any institutional investor that takes Ethereum seriously versus Bitcoin. Maybe someday they will, right? After this transition of proof of stake, if it's successful and you know, some of this, well, yeah, it is an open point, right? If it happens is you know, certainly not a guarantee because this is still kind of an unproven transition. But regardless, the here and now, it seems as though the scaling challenges ahead, which we are going to finally talk about, which I'm excited about, the scaling challenges ahead and some of the other features that you know the Bitcoin community and broader developer circle can solve, like that's just it's so much more important than worrying about what, you know, if you want to be honest, like worrying about what the kids are doing, which might be the approach that, or the mindset that most Bitcoin, you know, core developers have. Like,
well, let's go into an example.
Like, so why not just, you know, focus on, you know, your own house and your own barbecue and like let the kids play back in the sandbox?
Because it's entertaining. I mean, let's take an example, the Ethereum double hard fork. Like, what is the right thing to do there? Like, for the sake of the industry, we should say nothing and go, oh, that's good. They're doing another hard fork 2 weeks after that one. I hope everyone upgrades in time. I don't think that's likely. It's more likely that people go, LOL, you idiots, you forgot something. And that's really stupid. You know, I think that's more likely to happen because it is amusing to watch these slow motion train wrecks happen. And, you know, okay,
at least you're honest, man.
Yeah, I'm honest. Like, if Ethereum 2.0 does not pre-sell a token and they just build it, I don't think a lot of Bitcoiners would critique them. But the likelihood is they're probably going to sell a token to fund the ETH 2.0. I don't know what's going to happen exactly, but if you look at what they did for Raiden, which is supposed to be the Ethereum Lightning Network, they sold a token for Raiden. They didn't need to sell a token for Raiden. They raised like $20 million, probably more because the price went up after that. And where's Raiden, right? It's nowhere. And this is the stuff that people will pick on them for because it looks bad, and it is bad for everyone that bought into that. And I think it's not, I don't critique people for buying it. Like, if you buy Ethereum or Zcash, you know, go for it, you know, it's your money, do whatever you want. But I would critique the people behind it because I think they're misrepresenting things and promising things they can't deliver. But that's just speaking for me. I can't speak for other people in Bitcoin.
And I guess the core difference is you're saying, you know, they're promising things that they can't deliver. And you're using that as if it's 100% they cannot deliver. Whereas I guess the devil's advocate or the counter to that would be, yeah, maybe there's an 80% chance of failure or higher, but why wouldn't we at least try, right? So that there's you know, some of these other blockchains and protocols out there. Because, I mean, you've been around long enough in tech in general, you know how many disastrous, you know, open source and centralized, you know, software stacks there are. It's not as if this is a unique dynamic to have an open source protocol that's got severe deficiencies, but a large developer ecosystem that's working to patch them and you know, pull things together. Which I think is probably the strongest counter narrative to this. But
there is a point that we both agree on.
I'll let you have the last word.
Well, there is a point we both agree on. I think it's good to experiment with the technology and build stuff. So it's like some people don't even like Liquid because it's not Bitcoin. But I think Liquid is good because it bridges a lot of things to Bitcoin, because Bitcoin is the native currency of Liquid. So this is why we're doing Liquid securities. Like that's an initiative that I pushed pretty hard to do, because if you can have securities issued on Liquid blockchain, it settles with Bitcoin. It makes it easy to trade those things with Bitcoin to atomic swaps or whatever, and easy to move between different trading platforms and venues too. Like I like that kind of stuff because it helps Bitcoin in the long run. If you want Bitcoin to grow to several $1 trillion, well, what better way than to have the security markets linked to Bitcoin in some way easily?
Mm-hmm.
Like I think stablecoins are great for trading. They're a very effective tool for trading and arbitrage. I have nothing against them, right? So there's things like I don't critique because I think they're useful, but what I will critique and bash on is things I think are just ridiculous. Like DPoS is kind of stupid too. You know, it's proof of stake, but delegated. So what's the point? You just delegated your proof of stake things to some other guy and they're holding everything now. So how's that different from just a centralized database?
Which we're kind of seeing play out in real time with EOS.
Yeah.
So, well, I don't, I'm already going to get enough shit for this interview anyway, so I don't want to get too far down like the mudslinging route with respect to other tokens. But over beers, of course, people know that I'm pretty snarky on a lot of this stuff as is. Let's talk about kind of where Bitcoin is going, right? So you know, really the meat of this conversation, I think it was important to have a lot of this back history for people, especially going into the new year, because we sometimes forget that the audience and the community grows by, you know, an order of magnitude every market cycle. So by definition, 90% of the people that are even full-time and like down the rabbit hole just don't have some of this historical context. They just see like, oh, here's, you know, the guy is part of the Magical Crypto Friends and he's, you know, very snarky on Twitter and I don't like him because he bashes ETH and he's mean to me. But they might not necessarily know, you know, some of the battle scars behind it and some of the perspective that kind of informs it. Looking forward though, this is probably the most excited I've been about Bitcoin and kind of where it is from a development cycle, just technically speaking, in terms of some of the things that seem to be coming around the corner. So in my eyes, there's basically, you know, four major things. And I had written about this in my crypto theses for 2020, which I'll link to in the show notes. But Lucas Nuzzi from Digital Asset Research had a fantastic map of all the different layer 2 or affiliated upgrades and projects that are currently underway just with Bitcoin. And I'd say the four biggest are probably layer 2 payments, so Lightning Network, for sure, which has been, I think, properly hyped, but still very early. Side chains, we already talked a bit about Liquid, so maybe we won't spend time there. Some of the mining upgrades, better hash and the like, that are actually making this, you know, as decentralized as possible and maintaining that element of Bitcoin. And then finally, it's everything to do with privacy and additional scaling, which comes back to Schnorr and Taproot. So there's a lot of jargon in all these things, right? So I think Lightning may be the best understood out of those side chains we covered. Let's talk about the nitty gritty and this thing called Schnorr signatures that everybody is hot and bothered about in the Bitcoin community. It really seems like the linchpin for a lot of the upgrades that folks want to make for layer 2 or for privacy or you know, really a whole host of coming solutions in 2020 and beyond. So what are Schnorr signatures, and how can you kind of explain them in layman's terms versus like, you know, SegWit or as a complement to SegWit?
All right. So Schnorr signatures are just another signature type. They're meant to replace ECDSA, which is the old one. I think ECDSA was originally was created so that open source projects could use this because Schnorr was patented at the time. The patent expired, and now I think it's time to roll it up into Bitcoin, and that's what the developers have been working on. But it allows for more compact signature, signature aggregation, and it helps Bitcoin to scale somewhat because everything is more compact. But it's not a very exciting thing that most people will get excited about. Like I think developers and people building stuff in this space get excited about it. It
Mm-hmm.
allows you to do, I think, larger multi-sig transactions as well. And yeah, it's not, I think a lot of the Bitcoin developments happening currently, there's a lot of stuff going on, but it's getting to the point where it's less, I guess, news for the average user. The average user will probably be more excited about things like the Lightning Network and what it means for them, because that's something they can actually play with right away and understand. Whereas developers and protocol developers specifically are more interested to follow what's happening with Bitcoin at the base layer.
Well, let's talk about some of the things that Schnorr does enable, though. Right? We can talk about Lightning last, maybe, but for new privacy tools and kind of feature upgrades, it's critical to just essentially automate something like CoinJoin. So making it harder for transactions to be traced and then ultimately marked or blacklisted by some authority, which would maybe threaten the fungibility of Bitcoin. So it's boring but important, right? I think maybe we can unpack the privacy and any other elements on why, like the hardcore group of not just developers but like the libertarian crowd and like the OG crowd, why they're so excited and like what some of the applications are that are going to be unlocked here.
Mm-hmm. Yeah, I actually haven't read up on what they're excited about. So I don't think I can answer that right now.
As a non-engineer, I just caught Samson with his pants down, which is maybe the highlight of my of my Bitcoin technical career.
Congratulations.
All right, so I'll bail you out then. We'll maybe focus. I'll try to get Matt on for an episode early next year, and we'll talk about some of the stuff that he's doing in Square Crypto too. But so let's talk about Lightning. So this is another area that Blockstream has spent a bit of time and energy, along with Lightning Labs and a few other groups that are building here. I was disappointed in the pace at which Lightning kind of came to market this year. Maybe my expectations were too unrealistically high. But what first of all, what is Lightning in like the 30-second variety, and then kind of where do you see some of the most important upgrades and developments in 2020?
Right. So Lightning is a way to do payments with Bitcoin. So where Bitcoin fails and falls short is it's not good for small, fast transactions, just because there's a 10-minute block time no matter how you hack it. So Lightning is almost free and instantaneous. So you can create these things called channels and basically route Bitcoin through these channels to other people on the network. And it's meant to facilitate payments. There's a lot of big developments happening with Lightning. So multi-part payments is one of the things that just got announced recently. It's now in C Lightning. So that's a way for you to open multiple channels and route through multiple channels to create one big payment, which should alleviate some of the problems we had earlier, which is payments fail because there's not enough capacity in the channel or in routing. So this helps with that, which will hopefully lead to more mainstream adoption. But I think it's still really early for Lightning. If you look at it, I think it probably kicked off in 2018. There's been a lot of growth actually in 2019 too, but we've seen a lot of that taper off because private channels were introduced, which makes it harder to see how much capacity there is on the network. But by our estimates, I think there's probably 40% more capacity not visible than what we see right now. Mm-hmm. So I think the growth has been fast, but it's also very hard to use. I think 2020 is when we're actually going to see a lot of things happen, because 2019 is foundational building, the building blocks. So for C Lightning, we implemented plugins to make it more configurable and customizable for people. But I think 2020 is when we'll see people using those building blocks and improve stability to really build stuff on top of it. But ultimately, if point of sales terminals implement Lightning, that's when it will really take off. Right now, it's still hard to use relatively, because you have to do a lot of stuff. You have to manage your channels, and it's kind of like similar to running a Bitcoin node. Most people won't run a Bitcoin node because it's cumbersome. Those use like a web wallet or SPV wallet.
Do you really think it's going to take off, though? You know, I've wondered quite a bit this past year if the usability of Lightning is overshadowed by just the tax consequences and some of the other, you know, components. Maybe this is a very like US centric way of thinking about the solution, but it strikes me that you know, in the US, I'm just trying to think of like the tax reporting consequences as is of using crypto for anything other than speculation.
Mm-hmm.
It just seems like like a disaster on one hand, and then, you know, the other element is you do have stable coins now, which provide, you know, similar functionality in theory, that you know, ultimately might be more compelling because, you know, people recognize it's digital, unseizable, you know, store of value, like US dollar pegged. That might come with its own set of risks, but at least for the time that you're using it as cash, it's, you know, it works pretty well. I wonder where you're coming out on this, because the volatility issue, the usability and tax issue, all these things seem to be, you know, kind of compounding against Lightning versus some of the alternatives that might be built on Ethereum right now. And you know, we can argue all you want about, you know, whether Ethereum is a scam or, you know, the tech stack's a house of cards and whatnot. But at the end of the day, the users don't give a shit, right? If the UX works and it looks like it's dollar denominated and it's going to be straightforward, you know, I wonder, you know, how you think about that, or if you just disagree fundamentally and think, well, you know, the use case that I have in mind is wrong. You brought up point of sale, but I would think maybe it's something else that ultimately catalyzes Lightning growth.
Well, I think if you're using Bitcoin or anything else to pay, like you can use Ether, I think, also at various shops, I think. Who was it? Gemini rolled something out. I forgot in a partnership with who. But they allow you, yeah. So they allow you to pay with crypto too. So the taxation situation would be the same for Lightning payment, and that too, I would think, right? So I don't think the tax issues are going to be the same thing. It's going to be a challenge.
Well, I wasn't thinking about paying in Ether. I was thinking about paying in a stable coin. But if you're paying in a stable coin that doesn't really fluctuate in value, then you don't have the same concerns as, you know, I bought Bitcoin at 13,000, it went down to 7, and then it went up to 20, and you know, I got to track my cost basis every single time I buy a fucking cup of coffee because that's the country we live in.
Really?
You know, well, I mean, yeah, in the U.S., this is a longer conversation again, but
right.
Maybe it's looking externally or looking at other use cases.
Yeah, but if you're going to have to track every payment, you'd have to do that with Bitcoin too. If you're just paying with regular on-chain Bitcoin, I don't think Lightning solves or makes it worse in any way. It's just easier to use. But maybe that is a barrier for some people because they don't want to pay with something, right?
Exactly. So it's less about Lightning versus layer one and more about Lightning versus stablecoin alternatives that might exist on another blockchain now.
Right, but I don't think anyone is using stablecoins for payment either right now, like to buy a coffee, right? Because it's mainly a tool for traders to sit in a stablecoin or to use it to move fluidly between exchanges to ARB. But I could potentially see someday people might use a stablecoin, but that's also challenging because I think a lot of countries want to issue their own sovereign digital national currencies too. So that would compete with the stablecoin. Ultimately, I think whatever is more open and free will be the winner. So say you have something issued from the Federal Reserve and you have other stablecoins. I think if the Federal Reserve puts a lot of restrictions and limits on it, then it'll probably fail compared to the more open ones. But I don't know. I think people would want to pay with Bitcoin eventually, and it largely has to do with how Lightning enables a circular economy where you can earn and spend. So if you're earning your pay in Bitcoin over Lightning, then you could spend it easily too. And I don't know if you'd have to Yeah, the tax situation in the US is pretty convoluted, so I'm not sure how it would impact. But like, let's say you're living in some other country, like in South America or something, and you get paid for your contracting outsourcing work, then you could possibly spend it if like it is accepted at different businesses via some point of sales terminal that supports Lightning. And I think that's where it's powerful because it can replace cash.
Yep. Makes sense. Well, time will tell. What are some of the other themes for the year that you're most excited about, either at Blockstream or more broadly?
So for 2020,
Mm-hmm.
so this year we had our first Simplicity transaction using Elements. So Simplicity is a smart contracting language that we've been working on here at Blockstream. And I'm hoping that next year we can get it into Liquid so we can start playing around with some of the smart contracting stuff on Liquid. And potentially someday that could make its way into Bitcoin too, if there's consensus about adding it.
Mm-hmm.
What else is interesting at Blockstream? We did a few other things too. We have a mini sketch and mini script. So mini sketch is a way to improve, I guess, optimize network traffic for Bitcoin. Mini script is a way to simplify Bitcoin script. So it's like a mini version of Bitcoin script that makes it harder to screw up with Bitcoin script, because Bitcoin script is very hard right now.
Mm-hmm.
If you look at mini script, it's kind of like when you have algebraic equations with the order of operations, that kind of makes it more readable and easy for people to use. So people might be more willing to make Bitcoin smart contracts using script. But down the road, I think simplicity is where it's going to be. And there will be a lot of focus on that because you can do much more advanced stuff using simplicity.
Excellent. Well, it's been a fun conversation. It's always a pleasure to catch up, and I hope people enjoyed watching this episode as much as I enjoyed catching up and taking a stroll down memory lane and all the chaos we've lived through in the industry. Where can people find you on Twitter, and how can they get involved if they're interested in learning more about Blockstream?
Sure. So on Twitter, my handle is Excellion, EXCELLION. And for Blockstream, we have a lot of materials available at blockstream.com. I think we localize into 10 plus languages. So all of our blog posts and things are available if you're interested to read up on that stuff.
Excellent. Well, Samson, thanks again. And to everybody watching, I look forward to all the trolling, hysterical comments that I'm inevitably going to get from hosting this very entertaining conversation with Samson Mao. So thanks again, man. And we'll catch up real soon.
Thanks, Ryan. It's good chatting.
Cheers.
Cheers.
Till next time. Peace.